Hey guys, another brand new episode here for you on the Russell Westcott podcast and YouTube channel. So crazy fun story here for you. This one was a wonderful conversation I had with one of my clients, one of my coaching clients, Kevin Bunzeluk. And, we get into a little bit of the backstory at the start of this episode, but it's a cool story. So really at the end of the day, we're diving into a case study of a couple transactions. Now, I guess the really big theme that I could call for this video and podcast episode would be the power of creative real estate. Like if you truly are creative on how you structure your deals, it's amazing what can happen with just putting one deal together, on how just one transaction can be a launch pad, and even, or a better word would be even a linchpin towards multiple different layers of transaction. Kevin talked about here in this episode, he talked about one property that was on the MLS that anybody had an access to see it. Most people even went and saw it. Kevin, even as a realtor, took a client to go see the property and was representing the client. Just not everybody could see the potential on this one property. I'm not going to give all the details of the story, but suffice it to say, this one property, one of many that Kevin has bought, turned into be a huge home run, which then parlayed into doing some renovation work, getting new tenants, getting some drug dealers out, refinance, pulling out some capital to then buy potentially 2 new places. So wrapped up in this episode, we have strategies of vendor takeback, we have strategies of negotiations, we have strategies of refinancing, we have strategies of renovations, we have strategies of rent to own, and it is all wrapped up in one pretty bow. So the other thing I'm going to have you pay attention to as well is stick around right to the end. Kevin gives a pretty powerful declaration of what he wants to accomplish and what his goals are for his real estate investing goals and his dreams and aspirations, and a number. He actually gives a specific number towards the end of this episode of what he would like to have accomplished by what day. And you can just see the clarity. Now, if I were you guys, you might want to make sure you watch and listen right through to the very end and make note. I actually have that date marked in my calendar because I'm going to be checking in with Kevin to see how he's doing against that goal. But I'm not going to give it away. You guys have to listen and you have to watch for this entire episode to get that number. So sure, guys, hope you enjoyed this episode. And without any further delay, let's get right to it. Please help welcome Kevin Bunzeluk. Hey, Kevin Bunzeluk, how you doing? Welcome to the show here today.
Fantastic. Thank you.
Hey, Kevin, quick backstory. We were just having one of our coaching calls a couple weeks ago now it was, and you were just sharing this cool story of one of your latest transactions and a couple of your rent-own deals. And you know what? We said, Kevin, we just need to share that story. So that is the reason why we're having this recording here is we're gonna just do some storytelling. And, for guys, if you are watching this or listening to this, we're going to try our best to really break down some of the numbers and follow the bouncing ball. But there are a few moving pieces to the story. And we're going to get into the detail about some of these transactions you're doing. Because one of the things is it's just like, here's the bottom line. You actually got paid to buy a piece of real estate. In essence, you're actually going to get some money back after you qualify, after you purchase this property, and we're going to dive into that story. So if anybody is not familiar with who Kevin Bunzeluk is, Kevin, can you just give a little bit of a short Cole's Notes version of your story here for everybody? Who you are?
Sure. Born and raised in Thunder Bay. My dad was a contractor, so kind of grew up doing all kinds of construction stuff, went to business school, graduated, and I needed something to do and I needed a place to live. So real estate was a great fix. I bought a rundown 6-plex, moved into it, started fixing it up, started renting it out. Was kind of doing construction in the summers and my real estate fixing and renting in the winter time for a few years, and then quickly realized I was making more money on the real estate part-time. So quit the construction job, and that's when things really just started blowing up, and I built my own construction team, working on my own properties, fixing them up, managing them up, renting them out, did some flips, and haven't looked back since.
Right. You're also, you and I have shared a couple recordings over the last little while here. And as I've gotten to know you a lot more, I would consider you probably one of the best kept secrets in this country from a couple of reasons. Number one is that you're a phenomenal real estate investor, and underneath the surface, Kevin is just swimming underneath that surface, and he's just doing deals left, right, and center. And you actually don't broadcast a lot of the deals you're doing, and we're going to share a little bit about that now. But you're also one of the original podcasters out in the Canadian real estate space. And you maybe talk about the podcast that you created way back in the day and share a little bit of those resources that you've done.
I suppose so. I was involved with my local campus radio station. So I was started that in 2004, back when I was like at Lakehead University, and I had a show like DJing a music show. And when I started in real estate, I had this idea in the back of my head to do like a real estate program, and it was just kind of sitting there, and I was like, oh, I probably don't know enough. But some years went by, and I was kind of like revived the idea, like, hey, this would be a great idea, and just swung it by the station manager there, and he thought it was a fine idea too. So it started out that way, and started getting on the phone with all kinds of investors around Canada, around North America, and got to interview a whole bunch of amazing people. It kind of turned into my own weekly little coaching session where I get to ask them like all the questions I had and everything I wanted to know. So it was a way for me to learn, as well as share my things I was learning and things I was doing as well. So
yeah. When was your first episode that you launched?
I think 2015.
So
in the summer of 2015, maybe.
So you were, sorry if I'm using the term called the OG, the original gangster. You were one of the original hosts of the real estate podcast space, and within Canada, I think there was only maybe one or two other people playing that, and it's almost everybody's in the space now. So we all are standing on your shoulders, by the way, Kevin.
Yeah.
What was some of the key lessons you learned from doing that? That show? Like, if you were, I know we'll get into the story of your deals, but what were some of the key things that you learned from two perspectives? Number one, of producing a podcast show, and the second is one of the biggest lessons you learned from your guests.
Doing it, I think, like. So because I was involved with the radio station, like, it wasn't just a podcast I was doing, it was a podcast I was doing. And I probably would have, most people, they do 5 or 10 episodes and then it kind of fizzles away. And I could see that, I might have done that had it been just a podcast I was doing. Because I was involved with a radio station and committed to putting on a radio show for this, FM station, I had to produce a show every week. So, I had to do one every week. So this consistency is what allowed me to, do that. And I think, that's a lesson for the podcast to, if you're going to do something like that, you need to do it consistently. And then, same with, I guess that's same with any business or anything. It's the same thing, right? You don't need massive results. As long as you're consistently doing, what you need to do, you're eventually going to get the results.
Yeah. And I know one of the best feedback I had when I was considering doing my podcast, is probably one of the reasons why it was, delayed. Not that I make an excuse, but the person said, if you're not willing to commit for at least 3 years, don't do it. Because it does take time. And when you sit there and you look at some of your download numbers and it's like 7 people, and usually, what do they say? Your first 30 episodes are not very good.
Yeah.
So Kevin, you're going to be falling within one of my first 30 episodes. So we're going to make this an amazing episode, aren't we?
Yeah. And then you asked me what I learned from the people. So I guess it was interesting that a lot of them had kind of similar, even though they were doing very different things, a lot of them had similar messages. I'd have to think about it more carefully to know what they are, but like building that team around you, having the power team is something that, almost every successful person does. And that was a lesson I took a long time to learn, because I was one of those entrepreneurs that wanted to do it all myself. And, I was doing all the construction and I was doing everything myself. And then, slowly finding the right realtor and the other people to help me with construction and kind of bringing that team together is what actually allowed me to expand and do more deals ultimately.
Nice, nice. So just for perspective for everybody here, and it's funny, on one of our webinars we were doing, we just kind of floated out this, oh, by the way, here's what Kevin has done. And everybody just said, oh, wait a minute. What did you just say? So how many properties have you transacted would be the first question. Like, well, it has to be whether you do it dollars or door number, whatever you feel comfortable sharing. How many transactions have you done?
Dollars or door number? I don't know the dollars.
How many titles?
I currently manage like 40 rental units, I guess.
Yeah. So, and you own those yourself? 40.
Yeah.
Okay.
And I've done, 5 flips or so. I don't really prefer to do my own properties, flip them to myself essentially. But when I first quit my job, I sold them to kind of keep the money flowing.
Yeah. Okay. So first of all, 40 places is a phenomenal accomplishment. Like, most people will never, ever get there. But then you said something very shortly after that got everybody's attention. So you have transacted 40 properties or purchased 40 properties. And then you said 40 units. And then you said something without. And then what did you say after that?
I haven't used a bank to buy any of them.
So you have acquired
until now.
You've acquired 40 units without qualifying for bank financing, traditional bank financing, or bank financing in general.
Well, I've since refinanced some of them through banks, but the original purchase hasn't been. I haven't used a single bank to buy any of them, and I haven't been able. It's because I haven't qualified, right? I had a summer construction job, basically a seasonal job. And then I had no job, and had I thought things through better, I probably would have qualified for a few more mortgages before quitting my job. But I didn't know any better, and I just found another way to do it. So
yeah. And so if any of you are having that excuse, I'm sorry if that's a harsh word, but you know what, it might be, and I think it is an excuse that I can't qualify for financing. If you have that thought process in your mind, you're going, geez, well, how can I move forward acquiring properties? I can't qualify for financing. We're talking to somebody here who essentially has built his entire portfolio purchased his entire portfolio without bank financing, right? So what would you say to somebody that came to you and said, geez, Kevin, I can't qualify for financing. How can you help me?
Well, there's, several different ways to do it. So I guess it depends. It helps to have, ideally you have a bank full of money that you can just buy it with cash. That's the easiest way, I suppose. But there's, private lenders, joint venture partnerships, a bunch of different kind of creative deals that you can do. So I would suggest learning one or multiple ones of those, and then kind of sussing out deals that will fit those parameters.
Yeah. Now you are bringing out a program where you're going to help people. I think the working title, isn't it, Buying Without Banks? Is that still on the horizon to come out in 2020? Yeah.
So there's going to be different sessions on how to navigate those different strategies. So how to deal with private lenders, vendor takebacks, agreements for sale, like all the strategies I've used to build my portfolio, essentially.
Yep. And I know we'll share some contact information at the end, but so I would highly recommend, guys, just stay tuned, more details. But before we get to that, could you share your contact information if anybody is interested, maybe signing up or getting advance notice of that information? What's the best place to reach out to you?
Email, I guess, is kevin@lifestylehousing.ca.
kevin@lifestylehousing.ca. Okay, guys, write that one down. If you are interested in purchasing properties without banks, write that one down. All right, so let's dive into the story of your latest transaction. Now, I'm going to put a little context in this. You've been doing this 13 years, 14 years? How long have you been doing this?
Yeah, I bought my first property. It was in 2007.
Yeah,
June, I guess.
And you've invested a lot of time and effort into coaching and courses and training and materials to educate yourself on this whole process. So we're going to talk about a transaction that might be a little bit more on an advanced side. Would you agree with that, Kevin?
Yeah.
Like this would be
what are we talking about?
the story that we're going to share about your latest transaction. This is going to be a little bit more of an advanced transaction.
Okay. Yeah. There's lots of things going on there.
But. Yeah. And it might be a difficult one if this is going to be your first transaction. But however, there's a lot to learn from this, what we're about to share. Okay. So why don't I just step back for a second? Tell us the story about one of your latest transactions. Give us some of the strategy, and I'll just jump in from time to time for some clarification.
Well, the one I'm refinanced for this, I purchased a year and a half ago. So, but I don't know if you wanted to talk about that one, but I'm more excited about that because that's more what I like to do, and it turned out very well for me.
Okay. So a year and a half ago, you purchased a property. Talk to me about that.
A year and a half ago, and it wasn't a spectacular good deal. It came up on MLS. I saw it originally, and I think I was on another project or didn't have a lot of capital or something, but initially didn't even pursue going to look at it or anything. It was just kind of the type of house I would do and in an area I like. So I just kind of left it there, and it was listed for, several months, 2 or 3 months on the MLS. And then eventually I came back to it. I guess I was looking at properties and kind of came back to it and did a little digging, and I noticed that, the current owner had owned it for 30 plus years. He's had it, 6-unit building, great area, but, quite run down because he owned it for a long time. He's had some long-term tenants. He had some drug dealers living in there as well. So, there's his motivation for selling. He had this place a long time, probably paid it off several times. And, now he's got to deal with all this, nonsense tenant, which he doesn't want. So put it up for sale. So my initial inquiry on it was, hey, how would he feel about holding the financing on it? Being the bank essentially for me. And I feel like he's the perfect candidate because, he's had it paid off most likely. He likes getting those monthly checks probably, but is probably definitely a little tired, especially now that his tenants are no good. So, in this scenario, I could pay him a monthly check without him having to deal with the tenants or anything. So he was probably earning, as much or more from my mortgage payment that he was from the building, dealing with the tenants and all that nonsense or whatever. So the listing agent said, we could probably work something out. So I negotiated the purchase on that. He agreed to hold a vendor take-back mortgage for 3.5 years at 4% interest rate and at a monthly payment that worked out to like a 21-year amortization. And he held, it was like 80% of the value of, so I purchased it for $292,000. He carried $255,000 was his mortgage essentially. So I put 13% down. Had I been able to qualify for the bank at that time, I probably would have gotten the same rate. I would have had to put 20% down. I would have been paying for the appraisal. I would have been paying my lender fees, etc. So that turned out to be quite a good deal. Getting it from him. And he agreed to hold it for 3.5 years. In all those offers, I put that it'll be an open mortgage so that I can pay the balance out in full at any time without penalty, which turned out to be important in this case because I am paying it off, a year and a half later.
Kevin, just one quick question here. The $34,000 to close, where did that come from?
I came up with that.
Oh, you had cash, or was it a line of credit, or where?
Cash. Yeah.
Cash. Okay, so cash is still a preferred it's still a preferred way to buy real estate too, right? You can still use cash.
I think I had. I'm not sure where exactly it came from. I think I sold not too shortly before. Sold one of my flips. So
essentially, you had some cash available. But the news is no bank qualification. And you got in with only a 13% down payment on this property on financing terms that were probably what bank was going to be offering.
Yeah. So when I analyze the property, I look at it 2 separate ways, the numbers on a property like this. So I look at the current numbers. So the current rents, there was 5 units rented. they're all like below market value. So I do those 5 at what they're currently renting at, and the 6 at what I could rent it at right away. And I analyze the numbers that way. And then I do a pro forma. What would it be rented once I fix it up and rent it out at market values? What do the numbers look like that way? And I try to determine from that an after repair market value. So I use like the income valuation approach, what it's going to be worth once I fix it up and get it rented out for at the full market value.
So if I'm doing this correct, and I hope you picked this up, you acquired a 6-plex, essentially 6 rental units for under $300,000. Yeah, that's not $300,000 deposit. That's total of $300,000, right? What market are you in, Kevin?
Thunder Bay.
Thunder Bay. So there are those kind of opportunities that are out there.
Yeah, and I mean, this was a kind of rundown one with drug dealers in it. With the current rents and the mortgage I was paying, I was looking at, around $700 a month would be my positive cash flow. So it was still, making money right away. So I'm looking at the after repair market value. Conservatively, it turned out to be quite conservative since I've refinanced it, but I go conservatively, what's it going to be worth in, once I fix it up and have it rented out at full market rents? So I came up with $450,000. So this is how I come up with my offer price. I start at, the after repair market value, $450,000. And then my sweet spot, what I want to pay for the place is 80% of that, less the cost to get it there, less the repair cost. So 450 times 80 is 360,000. This place needed about $70,000 worth of repairs to get it there. That puts me at 290. And that's my sweet spot because I'm refinancing it at an 80% loan to value. So if I can pay 290, put 70,000 into it, and then get an appraisal at 450, get a loan for 360, I'm essentially able to pay off my mortgage, get the capital I put down, and get all my renovation costs. I'm getting all my money I put back into it back to me so that I can go do it again.
Yeah. Now, but here's the thing, guys, and I hope you guys picked this up. This was a property that was sitting on the MLS, correct? You had even seen it once before, did you not? Did I hear that correctly? That you even seen it once and then you weren't sure about it?
Well, I actually originally took a client through there because I had someone else interested in buying it, and I wasn't really too eager to buy something at the time, but I took him through there, and he actually got an offer accepted on it. But after I walked through, I was like, hey, this is really something I can do, and I let him pursue it. He got his offer accepted. It turned out to be, he didn't want to go through all the work and the time involved, so he ended up backing away, and I was like, well, I'll definitely make that offer.
Yeah. So suffice to say, anybody who was interested in buying a piece of real estate in Thunder Bay at that time, a year and a half ago, could have bought this place potentially. Like there was nothing extra. It was not an off-market deal. You didn't have to go out do outsourcing for, to have people come and attract you. It was just a property that somebody wanted to sell. Okay. And so you creatively put the deal together, vendor take back. You did your analysis. Okay. So talk to me about the process over the last 18 months of you holding this place. What was it? Was it a nightmare? Did you have to do some renovations? Did you have to kick out the drug dealers? What talk to me about some of that.
Yeah, all of those things. So, I took it over, so December 2018. Again, 5 of them were rented. There was 1 vacancy. So my original plan, I go into the vacant unit, fix that up to rent that out. And then, but when I took it over, 2 of the tenants weren't paying. So they didn't pay from when I bought it. They didn't pay. I suspect they weren't paying the old owner. I don't know for how long they were getting a free ride, but I suspect they weren't paying him for a while. So one of them was the drug dealer, and then another guy in the basement just wasn't paying at all. So, I very quickly filed my evictions for that. The one guy downstairs, as soon as I filed, he ended up moving out. So he made it easy. The other girl kind of dragged it on until the sheriff came and removed her. So now by that time, I'm done the vacant apartment, and then move on to renovate those other two. And then since then, during that time, another person moved out, fixed up that apartment. Now I have 4 of them rented at full market rents. I still have 2 of the original tenants. They're good tenants. They pay. They don't cause any problems there. So they pay below market rents. But I'm fine with that for the time being. I don't have to repair their units. They're paying their rent. So,
and I imagine they were pretty happy to have you do the work of getting out the drug dealer and the deadbeats.
Yeah. So the one was easy. She didn't pay since I went. So it was a couple months, but it was easy enough to get her out. And then once she moved out, the neighbor upstairs, I guess, took over her business and started dealing the drugs as well. So it was, and he was actually paying the rent for the most part, which makes it a bit harder. So I had to evict him for illegal activity. But I filed for the eviction. He didn't show up to the hearing. It was pretty easy to prove that he was, not behaving himself. And, that dragged on until the sheriff came again anyway. So, it took 6 to 8 months to kind of get over that and then be able, and, both those units were quite run down when I took them over.
Yeah. So some people, you would probably tell people is number one is, sometimes real estate investing and being a rental housing provider is not for the faint of heart. You have to have a pretty thick skin, eh, Kevin?
Yeah. And fortunately I have a good team now of people that help me out with that. So, I had a guy who was dealing with a lot of the complaints and stuff around that and that. So,
yeah. So when you, correct me if I'm wrong with my number, because I wrote this down and it sounded like it was about $700 cash flow when you first took it over. Is that correct?
That was based on everyone paying.
Everyone, paying. Okay. What's the cash flow currently on the place before the refinance? After you reposition, got some new tenants in and things like that. What's the property cash flowing now?
So I'm just gonna guess by doing 700 plus the difference in the new rents, 1,300.
So essentially, you've been compensated and rewarded for your time over the last little while of doing the work and renovating and evicting people and doing that. Essentially, you've almost doubled your cash flow over this time, right?
Yes. Well, the exciting part is the refinance.
Well, that's what we're just about to get to. You look at you. You're excited to just tell the story. Okay, Kevin, without further delay, let's talk about the refinance. So what is this place right now? What's it valued at? And tell me about the refinance.
So yes, currently I've been, dealing with a credit union that's happy to, despite my lack of employment income, happy to lend on my rental properties. So I've been, getting a few mortgages with them, and I asked them about renting this, and I was like, kind of kept my old market value. I was like, yeah, it's probably worth about, $450. I have this mortgage worth $250 that I need to pay out. And they said, okay, we'll pay out that mortgage if it appraises for, $380. And I was like, well, that should be no problem. I went back, crunched the numbers again. Like I said, I'm very conservative with my numbers. I want to know that if I say a value, it's, definitely going to be worth that. So I do it quite conservatively. So I was doing it again to send to the appraiser, and, a little less conservative this time to try and, go by what the appraiser might think to give it a higher value. So here's another interesting thing. When I was taking the real estate salesperson course, it said in the books that to appraise an income property, we're doing the income valuation style. To do that, you would use market rents. So if an apartment's renting for $500 a month and the market rent's $1,000, you would use $1,000 as the income. And, as an investor, I'm like, no, that's wrong, and I mean, as an investor in Ontario, because in Ontario, you can't increase the rent to $1,000. If my rent's $500, unless that tenant moves out, I can only increase it by 1 or 2% this year. So until that tenant moves out, I can't rent it at the market value. And if they're only paying $500 a rent month, which is a real example for me, those tenants don't move out, right? So that's something I was like, I don't think I really agree with that. And I did get an appraisal shortly after that. And I asked the appraiser that. I was like, do you use market rents or do you use the actual rents? And he was like, oh, I use the actual rents. And then the appraiser after, I used someone else and they said, oh, we use market rents. So I'm like, well, that's the appraiser that I'm going to refinance my properties with, because they're appraising at, an income that's much higher than I'm actually getting. So right now I have two of the existing tenants. One is paying $450, one's paying $550 for apartments that are worth more like $800-900 a month, right? So the appraiser that I'm using now is using the market rent, so she's happy to use $900 because, well, that's what they teach in the course apparently. But as an investor, I'm buying the income. So unless I have a plan to get rid of those tenants, the $500 is what you're going to be collecting for potentially a lot of years. So I want to buy at the market rents. If my appraiser wants to I want to buy at the current rents. If my appraiser wants to use market rents, I'm fine with that. So I reran the numbers at the new current rents, the new expenses, and I came up with closer to like $550. So I was like, oh, that's pretty good. That's what I sent the appraiser. She did her thing and came up with a value of $575 for that building.
Okay. You said an awful, no, that's awesome. So first of all, I'm not trying to stop this. The first thing I want to say is congratulations. Like that's huge. That's an awesome success story. You've said a whole mouthful, and I just want to make sure I capture some of this. Number one, guys, as Kevin said, as just gold, was you buy at market rents and you appraise and you refinance at appraised rents, like or you buy at the real rate, the real rent, and you get it appraised at the market rents. That's what you said. Is that correct?
And if you can sell at market rents,
yes,
then all the power to you. But
buy at current rents, sell at market rents, in essence, right?
Yeah.
So you have it now appraised for $575. When you did your first analysis, if I have my numbers correct, you analyzed this at $450, right? And you bought it at $292.
Yeah.
So in 18 months. Right? Is that correct? On a property that was on the MLS.
So yeah, there was some appreciation there. The rents have gone up. Like I said, I'm very conservative running my numbers. So
okay, so talk to me about the refinance. Like, how is that looking? What's happening with the refinance of this story?
Yeah, so now I'm my new interest rate. I'm getting a 5-year term on this, 3.59, I think. So, and they're just paying out the existing mortgage. So the payments are a few $100s less. So now the cash flow is going to be somewhere around $1,600 a month. That includes, property management, vacancy allowance, repairs and maintenance, everything.
Okay, so the credit union is paying out the current vendor take-back mortgage. That as a starting point, that's correct?
Yes. So they won't give me cash to go on vacation. They won't give me 80% of that and let me put a bunch of money in my bank. But what they will do is they're going to look at my overall, so I have several mortgages with them now. And they want my overall portfolio to be, they want me to have, they want their loan to value to be there. But if there's extra room, which there is in this property, then they're willing to lend on another property in this case, I'm just buying another property and they're lending the entire purchase price of that property. And that was the agreement. If it appraised at 380, they would pay off the vendor take back and lend me the entire purchase price of this new property. So it appraised a lot higher. So now I have room to potentially do that for my next purchase as well.
So even at a worst case scenario, if all they would have done was just paid out your vendor take back, you got a lower interest rate, you got a lower payment, and your cash flow went up. Even at a worst case scenario, that's a win, Would you not agree?
Yep.
But at the same time, the bank was saying there's now, because you have all this built-in equity. So in essence, what would be the mortgage balance on that place now? Because the bank originally you said was 255. What's the balance today? Was because there was an amortization schedule to that, was there not?
Yeah, so it's like 248-ish or so.
So 248 divided by 575. So you're at about like a 43% loan to value on that property. Okay. So you have lots of equity on that property built in. Then you said something in passing there pretty quick that people might have just glossed over, but essentially you're buying another property right now, correct? That's why you're doing this whole refinance, is you're buying another property. So talk to me about this new property you're buying.
Yeah, so I probably would have waited because I haven't done all the work to this place I would have liked to do. There's a few more things to do, but I probably would have waited. But I have this rent to own deal that came about. I wanted to get the credit union to loan on it. They were happy to do that, and they were happy to do that. I was talking about refinancing this as well, so. And it is a better rate, so it's good. It's good anyway. I probably would have done it anyway. But because there's extra equity there, they're lending the entire purchase price of my new property.
Yeah. So you essentially you found somebody, and there's a whole other lesson here we could talk about just doing your rent to own deal that you're just doing right now. So in essence, you found somebody to do a rent to own tenant buyer, and they've found a place, and has the conditions been removed on that one?
Yep.
You're moving forward. And then and then the credit union is lending the purchase price on the rent-owned property, all wrapped up in the refinance of paying out the vendor take-back.
Yes, and my tenants already paid me their option deposit, which will more than cover my closing costs, legal fees, etc. So I'll be putting money in I'll be, essentially paid money to buy this property. And then, hey, for the first time, because I've normally done these fixer-upper type properties that take a year and a half to become cash flow positive and turn around. But this will be the first property I purchased where I'm having a tenant move in and it'll be cash flow positive from day one.
Wow. And you're probably going to like that process a little bit more. It's less work on your part.
Yeah.
So talk to me about the rent-own purchase. Walk me through some of the details of that one. What's the so how much did the tenant buyer put up?
$5,000.
$5,000. Okay. What's the purchase price of that property?
That is $66,000.
$66,000. Okay. So the credit union that you did the refinance for is giving you the full purchase price of this deal? Or how much were they giving you?
$66,000.
So they were essentially 100% financing you on this. But that mortgage was attached to your sixplex, which you had the extra equity that we told the first part of the story, correct?
That's why they were willing to lend the whole purchase price, yes.
Because you essentially, your sixplex guaranteed the collateral for this new purchase. Okay. Yeah. Okay, so after closing costs,
I only owe.
Oh, go ahead. Sorry.
I was just going to say, even though I only owe $250 on this mortgage, they're going to register on title a mortgage for a higher amount so that they have their security.
Yeah. So essentially, on the sixplex, that was what, 248, I think you said, plus now 66 equals 315. And divide that by 575, you're still only at a 55% loan to value on that place. So, wow, well done. Now, this rent-owned property, okay, so got a $5,000 deposit, and that's how you said, there's probably about $2,000 in closing costs. So, in essence, because of the deposit they gave you, you probably got to pay a check for about $3,000 to acquire this property.
Yeah, and they're going to pay me their first month's rent, probably as or before it closes as well. So,
So that's how you get paid to buy a piece of real estate. Now, okay, so the rent-to-own deal, $66,000. What is the contract price you have with the tenant buyer to sell it to them at?
So that'll be in 3 years for, I believe, 79,000.
Okay, 79. And what is your estimation money that you're going to make from this rent-own transaction, assuming this one tenant goes through with it?
Sorry?
What's your estimated return on this property on your rent-own transaction, assuming that this tenant does go through with the purchase of it?
Yeah, well, if you don't invest any money into the deal, then it's an infinite return.
Right. This is true. But let's talk about this instead of a return number. Let's talk about a profit number. Or not profit, a total payout at the end to you. So you're selling it for sorry, go ahead.
Yeah, looking to make about close to 20,000, 18,000 or so.
So 18 to 20
That's cash flow and profit on the sale.
So essentially, you're potentially going to make 18 to 20K on this property, on a property that you got paid $3,000 to buy. In essence.
Yeah, and the tenants are going to do all the snow, all the grass. They're going to even renovate. They have plans to renovate the bathroom already.
So guys, I know we talked a lot of numbers and we went through this fairly quickly. Sometimes people are just sitting there going, okay, I need the spreadsheet. I need to see this and stuff like that. And I get it. I totally understand that. But here's the key message that I want to share with you guys is when you do deals and when you have transactions, just the creativity of it is where the deal can happen. Would you not agree to that, Kevin?
Yeah. Oftentimes you can just kind of make a deal by structuring it the right way, right?
Yeah, and just dealing with private financing and vendor takebacks. Now, here's the next question I have for you, Kevin, is Mr. Vendor Takeback. What's his plans with his money that he's going to be getting?
So, yeah, I'm not sure. I kind of asked him about that. He was fine to keep it, but actually what's funny is that I was like, I didn't tell him how my appraisal turned out, but I was like, I kicked out the trash there and it's been going really well. And he was like, oh yeah, that's why we sold it. And then I said, yeah, I'm looking for more of these types of properties if you know of any for sale. And he actually said, well, I have another house that I'm been kind of thinking about selling. And my sister has a 3-plex that she wants to sell. So now I'm kind of pursuing some of those opportunities.
Wow. And so potentially this person that you're going to cash out could be an investor, potentially. Might be a private lender. They might just really like you paying them interest on their money, right? So that's definitely an avenue. But then also it could turn into another couple more properties that could come from somebody who already knows and trusts you, that you've proven that you execute against deals.
Yeah, they certainly might be willing to lend on their other properties they're selling. So.
Well, and I imagine you probably used language something as, would you like to still get those monthly checks that I've been given? Were they monthly or were they quarterly? How were you paying them?
Monthly, yeah.
Would you still like to, because sometimes people would sit there and go, geez, that monthly check is going to start going away.
Yeah.
And he might not be able to get that kind of return. Who knows, right? But you did say something very early on that he was getting more of a check from you being a lender than he was probably dealing with all the stuff with the tenants.
Yeah, he had tenants that weren't paying, vacancies, and he didn't have a mortgage, but so it was probably okay. But, now he doesn't have to do any work and still get paid. But yeah, I think the best part about the private lenders and that is that flexibility, right? I can ask for an open mortgage and they're fine with it. I can, a lot of my flips, what I've done is I've paid no monthly payments and just do a lump sum payment at the end. So all the interest is kind of deferred till the end, because on a flip or when you're renovating, you don't have that income coming in, right? So, just different things like that the banks, aren't really keen to do.
Yeah. Oh, so really, it's kind of a tale that you're telling here is, sometimes maybe you just need to get your feet in. You need to get in the game. And the only reason why you're able to do this next rent-to-own deal today is because of actions you took a year and a half ago. And the action you took a year and a half ago is now paying off to you today, that you can actually acquire properties with absolutely none of your own capital in. And you also have another rent-own that on our conversation just recently, you just shared that potentially you have another rent-own that you're negotiating on right now. Is that closing? Have you seen the place? What's going on there?
I have an accepted offer on it, so it's conditional right now. I haven't even seen the house, but my tenant buyers have. They like it. They want to buy it. So
now is the credit union going to lend on that one as well? Potentially.
So that's my plan number one. So I'm looking to get hopefully 100% financing on that one too.
Wow. So potentially from one deal 18 months ago, you potentially could get another 2 free properties in essence, right? Free from a standpoint of, when I say free, not that there's $0, free from a standpoint that none of the money comes out of your pocket to buy the place.
Yeah.
All for a property that was on the MLS that any other person could have probably purchased. Do you still have conversations with the guy that didn't go through with the deal? Do you know them?
Yeah.
Do they know the story of this now? The full story?
No, I haven't chatted with him about it since the appraiser all in that. But yeah, I mentioned that I got rid of the drug dealers and it was going well, and he was like, well, I wasn't really in a place at the time where I could have done that, but good for you.
Yeah,
kind of thing.
Now, I know you're also a licensed realtor in Thunder Bay as well. And this is a comment a good friend of mine had said, but he's a licensed realtor too, but he's also a real estate investor. And he said that he goes, guys, you make, you can sell places. That's great. But you actually make your money if you're buying the places, right? So make sure that you're always investing and you're always the buying on side of things, but you're happy to help represent people to sell their properties if they need to sell at the same time. Okay. So what are some of the key lessons that somebody who's watching and listening to this episode, what would be some of the lessons that you would leave with people here? And I know this can be just completely off the cuff and we're just having a conversation. What were some of the lessons that you would leave for somebody if they're looking to do these kind of deals?
Yeah, I just thought of one there. That's maybe a new one that we haven't touched on. But, since I became a realtor, it's only been the last 2 years. But since then, I have purchased quite a few more properties than I have before. And the reason for that, the only reason for that is because I've been making more offers on properties. I've been seeing more properties and I've been writing the offers. So the key lesson is to just, write an offer. You can't buy a property without writing an offer on it. And, go visit the property, figure out how you can make it work for you and try that offer out, and you got to figure out how you can make like a win-win situation where, that seller is going to benefit and you can still get the deal done. So it's going to work for you, and write that offer. And the more offers you write, I get a lot of offers rejected, a lot of them. But, when I see a property I like, I write an offer on it. And eventually they stick or we can work something out, right? So that's my main lesson, is to just, make an offer.
No, yeah, it's where the rubber hits the road. Is you will never acquire a property without writing an offer, right? So what would be some other one you want to maybe share another? So really, and I'll give you a moment to think about this. So I'm going to recap for you guys just some of the strategies that was used in these transactions here. So you did a vendor take back. You took a problem property. You transitioned the problem property. You renovated it. You got it reassessed at a new valuation down the road. And with the reassessment of that reevaluation, you're using that available equity to buy some rent-to-own deals that you're negotiating on right now. Had you ever done a rent-to-own deal before these two, Kevin?
Nope.
It was just something you just decided in January this year when we were setting some goals, didn't you? You just say, I think I'm going to do a rent-to-own deal or two.
Yeah. try something new.
You're just one of those guys that just, when you put your mind to it, it's just like you just instantly implement. It's like you're one of the best implementers I know of things that we talk about. And when we have some conversations, you just instantly go out and you just do it. So walk me through how you learned how to do rent to own. And what steps have you taken on your rent to own process? What have you done? What's step number one?
How I learned. I learned about it quite a while ago. I originally from a book.
Mark Loeffler's book, maybe?
Yes, that sounds right. It's quite thorough and explains the process very well, and was available at my public library, I believe. So, and it gives all the numbers and basically A to Z on how he does it. And then, since then I've interviewed multiple people on my radio show on their rent to own process, how they do it. So when I originally decided to do it myself, I was the first thing I did was I kind of had an idea of how it went, but the first thing I did was kind of dig into the spreadsheets on, how I can analyze my returns, how much, of a deposit I should take, how much the rent's going to be, how to get, because very important is that the tenant buyers are going to qualify for the mortgage at the end of the term. So how to analyze applicants from a qualification perspective. So before I'm looking at, will they make a good tenant? Now I'm looking at, will they make a good tenant, and can they buy this property from me at the end of the rental term? So There's those two considerations. So that was the new one I had to add to it.
So really step one is to know your numbers and to do the analysis on what does a deal look like, would be really the foundation to start with.
Yeah. And then after that, how to attract tenant buyers, how to advertise for, and how to communicate with them and running them through the funnel. I mean, there's a lot more education involved. Like, people are interested, but not really sure how it works. So you kind of need some systems in place to teach people about the process and shift through a lot of the tire kickers in order to get to, those one or two good applicants. And then, they're buying homes that I'm okay to own anyway. So,
what did you do? What did you do to attract the potential tenant buyers? Where did you advertise? What did you do to attract the people that are buying from you now?
Yeah. So originally I thought it would be a lot more complicated. I would need the big website and all this fancy stuff. And
that's the point I'm trying to get to. It's actually simpler than you think.
Let's start eventually it was like, hey, let's simplify this a bit. It ended up just being like a Kijiji and Facebook ad, a very simple ad with a short paragraph description on, what the program is and what I'm looking for. And then when people reply saying I'm interested in more information, then I have an email that it's a template email that I copy and paste to them. As you know, I like those a lot. So I send the same email to everyone who's interested, and it explains the program in more details. This is how it works. This is what I need to qualify. If you're interested, let me know and I'll send you an application.
Right. So
from there, I don't hear back from most people. And then some do follow up and say, yes, I'd like an application. And that's when I send them an application.
Yeah. So essentially you put one ad on Facebook and some posts on Kijiji. That's really all I did. And what is the gist of the ad say? It doesn't have to be word for word, but what's kind of the top line summary, what it says? Sort of
like, tired of renting, pick the home you want and move in now and, rent to own. So yeah, I'm doing a tenant first rent to own where I'm selecting the tenant. And then once I've approved a tenant, they're allowed to go choose whatever house they want, with my approval, of course, but they go shopping for a house and then I buy it for them and rent it to them.
Yeah. So essentially you just ran the ad. People would then reach out to you. I imagine was it phone call or your email? What did you give them as a call to action? Email. And then when they contacted you, you just sent them off a templated email, which you saved in your in Gmail. And it just explained a little education. You've never met these people yet, have you?
No.
You just send it off. And then from there, people will say, we're interested and we'd like to fill an application? Yes or no?
Mhm.
Out of every 10 people that contact you, how many applications do you think you send out, give or take?
I don't know, one.
One? Yeah. And when that application comes back, what do you look for in the application?
Yeah. So again, like number one, are they a tenant I would want? Would I rent them one of my properties? And then number two, I'm looking at so I created a new application for my rent to own. So I have my rental application and I created a rent to own application, which is pretty much the same, except for now I look at their total assets and their total liabilities. So I want to know how much they owe on their credit cards and what the monthly payment is, how much they owe on their car payment, what the monthly payment is. And then I'm doing some, quick debt service ratios to kind of see how much home they could afford, what they could afford based on their income, and then based on their debt, what they could afford. And will they qualify for this mortgage in, so many years if we set up the right plan for them to fix their credit, pay off those debts, et cetera.
Right. Okay. So, it's not a big leap from being a rental housing provider and qualifying people on an application there to doing a rent to own potential. You're just asking for a little bit more financial details and see what they can essentially qualify for as an asset and see if they can maybe qualify for a mortgage down the road.
Yeah, that's the big thing is you have to learn what essentially, and you could probably partner with a mortgage broker and have them go talk to a mortgage broker or a credit coach and kind of see what they need. But I learned kind of, some various things like if their credit score is X, how long would it take them to get it up to? What kind of credit score are banks looking for? What debt service ratios are banks looking for? So I've learned about the qualification terms, which I knew as someone who's qualified for mortgages and someone who's a realtor. So it wasn't a hard stretch for me, but that's the extra piece that you need to go from a landlord to a rent to own landlord.
And 100% can be done. So essentially you then, some people, and here's the point, guys, if you don't feel comfortable doing those kind of things, I know many people that do these kind of transactions that just partner with a mortgage broker and send the application to the mortgage broker and let the mortgage broker do that work. Right. And some mortgage brokers do that. They might charge a fee. They might have it as a service. One of the things they might want to do is the mortgage broker might want to get the lending business when you buy it. They also might want to lend to the rent-owned tenant buyer. There's got to be something in it for them if they're going to do that. And some charge a fee for the credit counseling at the same time. So do you offer any kind of service or credit counseling or some education for people along the process? And I know this is new for you because these are your first two, right?
Yeah. So and that was my plan, but it's going to depend on the tenant essentially. So the current ones I have, they seem very smart. They know exactly what they need to do. I'm probably going to just check in on them every 6 or 12 months.
Yeah.
To make sure they're on track. But someone else might need a little more handholding and stuff.
Yeah. And essentially you're just going to kind of, I guess the message is you're going to kind of just go with the flow and see what happens. Like some of them might just be, how much down payment will they have at the end of the calculations that you've done with their upfront deposit plus their option money? How much of a down payment will they potentially have at the end when it comes time to purchase?
Depend on the term, but around 8%.
Right. You probably need, you need minimum 5. 10's better, but 8 potentially can work too, right? Or maybe they just have to come up with a little extra at the end. How do you structure the payment on a monthly basis? Do you have a rent amount and then a option to purchase amount, or do you blend them together and give a credit? Like, how do you structure those?
Yeah, so they pay an initial upfront option deposit. It's essentially a fee for their option. It gets credited back to them when they purchase.
Yep.
And then they pay a monthly rent amount, and then another monthly amount that ends up getting credited to them when they purchase.
Right.
The credit's about 20% of the total rent that they pay monthly.
Okay. So you've had, so somebody goes in, you've qualified them, you've done some of the quick calculations. It seems like there's a fit. Have you met these people yet? Have you like gone out and actually met them, or do you just have lots of email or Zoom calls, or how is that? How's that process?
Yeah, so the one I'm doing is a current tenant of mine.
Okay.
They live in one of my rental properties, so I know they're good tenants, and so that was
that's
pretty easy there. But
yeah, smart. So now they go out and they go shopping. Like, you tell them the parameters of what they can shop. You maybe pull some listings for them and say, this might be a good idea. This might be good houses for you.
Yeah. So essentially I'm going to be helping them shop. Like this one, she had expressed interest. I said I would like to work with them. I was out of town, and then all of a sudden she started emailing me like, all right, we're looking at this property. We're doing this. And then eventually it was like, oh, we found the property we want. Let's put an offer in. And I was like, oh, okay. So they essentially had already seen it and already done all the work for me. I was like, oh, okay, fine.
Yeah. But you're going to go see the place and you're going to do your inspection, because at the end of the day, if they don't purchase it, you're the one buying it. Right? Even though they're going to buy it from you. I look at sometimes on especially a tenant, like we're talking here, tenant first, this is essentially a selling strategy. It's you're selling it to this person, but you have to first acquire it.
Yeah.
And
so they paid for the home inspection, which I was able to see. They're buying it. They're already committing to buying it now. So they need to do that due diligence up front. They can't move in and then say, oh, the condition's no good because I've already collected these fees they might not get back if they don't buy it. So they should be doing that home inspection and any upfront due diligence they need to. Like this other one's a rural property. So they're going to be getting a well test done and stuff like that. They're going to be living there. They're going to be buying it. So, I want to know that's good, but so do they, right?
Yep. And all of this you're manifesting all of this into reality because of some actions you took a year and a half ago. And you're in essence, you're a creative real estate expert as you put together creative deals and you potentially acquire properties. Up until these last two, you acquire properties without using banks. In essence, you're using a bank to acquire these two rent-own deals, aren't you?
Yeah, well, technically, we'll see how the second one goes. Maybe I'll find a partner or something for it.
You never know, right? So, do you use investment partners for transactions?
Mostly, it's been like private lenders and other strategies, so I can do it myself. But yes, I have.
Yeah. So, if anybody who's listening or watching this show today, if they're interested in the Thunder Bay marketplace, or would you be able to help them out, maybe as either represent them as a licensed agent, or maybe even do the work for them and give them a return on the money? Are you open to that? Someone reaching out to you and see if there's some opportunities.
Yeah, definitely.
Okay. And one more time, what's the contact information?
Kevin at lifestylehousing.ca.
Awesome. Well, we're right around an hour here, Kevin, and I know how crazy super busy you are, and you've got the young family, and you're full time in this game of real estate investing. And so, just a couple things, and a couple questions I always end off with as follows: is what are some final inspiring words you'd love to leave with people? Maybe they're just in search of some answers, or they're just maybe feeling a little bit stuck, or they're just looking for a little bit of some inspiration to keep going forward. What would you offer to somebody?
Just get some help. Find someone to help you through the process. That was another common theme from all the people I interviewed. There was, close to 150 of them. They all use coaches and mastermind groups, and no one did it on their own. Like I said earlier, they all built a team around them. So, you don't have to do it on your own. You can get that help, get the team. If it means joining the course or paying a coach, it's, usually more than worth it.
Yep. Sometimes one of the fastest ways in is to buy your way in, right? And, sometimes you don't have to go through the 10, 15 years of trial and error, or if you can just tap into somebody else or somebody else's system or somebody else's resources, you potentially can just buy your way in and shortcut that process. So awesome.
Yes, like you called me a creative expert.
Yeah.
And I'm kind of thinking like, I'm not sure if that's the case, because everything I've done, I've just learned from other people, right? Like other people before me have done it. And, I'll say that I've copied them, right? Like I read the rent to own book. I interviewed the experts. I learned what they were doing. I started through the process. I asked people questions about it. I got in touch with other people who were doing it while I was going through the process. I talked to you about it. And now it became a success, right? It wasn't by accident. It wasn't because of some great insight I had or something I was inventing. It was, by surrounding myself with people who have done it and copying what they do, essentially.
Yeah. And I think the most important thing is you did the work. You put, you learned, and lots of people, let's put it this way. There are, tens, I don't know how many people that have read the same book as you were talking about. Maybe there's tens of thousands of people, 20,000 people that read that same book. Not everybody has taken action from it, right? So give yourself credit that you actually implemented the things you learned and you did the work from doing that. And you know what? Put the work in, put the time and effort into, expand your network, and you will get the result at the same time. So awesome, Kevin. Oh, that's quite the story. When we first go, I go, let's just tell this little story. And it's like, there's like car crashes and drug dealers, and there's, renovations, and there's refinances, and really how it all stemmed from just that one transaction of that one sixplex that was on the MLS that anybody could have potentially bought, how that blossomed into multiple transactions going forward. So one next question for you, Kevin, is what's next for you? What's this? You've done you're like the original podcast host. You've done the Lifestyle Housing Summit. You've kind of cranked out doing these creative deals. You're putting together a Buying Without Banks training program for people as well. What's the big vision for Kevin Bunzlick?
Is that not enough?
No, hey Kevin, if it says Russ, that's enough. I need a break. But what is next for you? Is there a next or because I know the hunger that you have and the passion you have for bettering yourself and helping others. Like, what is the next vision for you?
I'm going to grow my rental portfolio for the time being. I have a goal to earn $1 million of gross rent by the time I'm 40.
Okay. Kevin, $1 million gross rent. Is that on an annual basis?
Yep.
What's that number at now? Do you have that ballpark number now?
Close to 400,000.
400. So you're 40% of the way. How old are you today?
I am 35.
35. So 5 years. So guys, we're going to date this. It's going to be in the year 2020. Okay. When's your birthday, Kevin?
October 23rd.
Is it really? That's my wife's birthday. Same day. So October 23rd, I will definitely remember that day. So October 23rd, 2025. Kevin Bunzlick will have $1 million of gross rental revenue in his portfolio, or a run rate at that time. So guys, if you are watching this or you are listening to this podcast, Kevin just I maybe helped you make a declaration. Mark that in your calendar on October 23rd, 2025, that we're going to check in with Kevin and see how he's done on that goal. Do we have your permission to do that, Kevin?
Yeah. And then once I get there, I'll probably start selling some off, paying some of the mortgages down.
Yep.
Maybe be the vendor take backer myself, or the private lender myself from there on in. But for right now, I'm having a great time.
Nice. Good for you. Well, I'm marking that date in my calendar, Kevin, to send you first of all, send you a birthday card in 2025 on that day, and also check in on how you're doing on your goal. And I know we're going to have lots of conversations along the way. I've been really enjoying working with you. You are, like I said, you truly are a gift in this Canadian real estate investing land community that I don't think enough people know who you are yet. Even though you did the podcast, and I think you were the guy behind the scenes a little bit more, but I think it's time for Kevin to step into the front of the stage and be the leading man, be the leading star of the show, because you have so much that we all can learn from. So if I have my way or anything to do about that, I want to help you become more of a front and center star in this whole real estate investing space, even though you already are. But I think there's room for you to expand.
Yeah, I never really, until the podcast especially, I never really shared what I was doing in my real estate with anyone for some reason. I'm pretty private in general, but I would be like dating girls who thought I lived in the bachelor pad, which I was living in, but I owned the whole building. I didn't tell people that. It was just like, and then, doing the radio show, I kind of started talking more about the deals I was doing, how I got started and stuff like that. So.
Yeah. Well, there's an entire, and sorry if I'm going to go on a tangent here. You've self said that you're fairly shy and introverted, right? How does a shy introvert be able to get on to and do a radio show and DJ and host a radio show? Like what did you have to do in order to, because that's going to be pretty daunting for somebody who's maybe an introvert. What do you have to do as a process to do that?
Yeah, I'm definitely introverted, but I don't consider myself to be shy.
Okay.
There's a difference between those two. Okay. So,
I'm putting my words, I'm using my reflection. That's what I am.
So when I originally started the radio show, it was kind of just our campus radio station was just getting started. So it was in this tiny closet. And it wasn't on the FM then. It was only broadcast over the internet. You can see how many people on the website were listening. There was 4 to 7, and that included my mom. So it wasn't at all intimidating for me to just go spin my favorite music. And I spent 14 years doing that. About a year in, we got the FM license and became an FM channel and stuff like that. So, but by then it was I had already been doing it. It was pretty natural transition. To have a talk show was a bit surprising to some people because I don't talk. But when you start talking to me about real estate, I can just go on and on about it.
Yeah. There's something, and you and I have had this conversation. There's just something about presentation. I call it presentation, Kevin. When Kevin's starting to do a presentation and when he starts sharing a story or sharing a deal, there's just something that clicks in you. And there's just something that you light up and you smile and you just, it's not a different person, but there's something that comes out when you're doing that. And it's because you did the work and you put the reps in, and you did the reps when nobody was listening or nobody was watching, and you put the work in, right? Wow. I sense another episode that we maybe can have a conversation about how to maybe bust out of your shell for people. Because there's an awful lot of people in the same position that might be just a feeling in a little bit of a shell that just maybe need to have some strategies on how to bust out of that. So are you open for another conversation down the road, Kevin?
Anytime.
How do you feel about being on the other side of one of these podcasts or interviews, being interviewed as opposed to the person interviewing?
It's okay.
Yeah. So from somebody who's done 150 of these things, how did I do today? So because this is all about me, by the way, it's not about you, right?
Yeah. Well, you're still under 30, so pretty crappy probably, but you'll get there.
Oh, thanks, Kevin. Thanks for the encouragement, brother. Well, here's the fun thing is it's fun. I'm enjoying it. And I learned, it's like what you said earlier about just having these wonderful conversations. You just learned. And no matter, here's the thing is I've been doing this for 20 plus years. I've seen and I've had conversations with amazing people with, potential $1 billion portfolios and all that kind of stuff. But each conversation I have with somebody, I learn something new. And that's just kind of the attitude I take of always taking something from the conversation and also contributing something to the conversation at the same time. And you have a lot to share. So Kevin, thank you very much. And from everybody, one more time, quick for contact information. If anyone wants to get a hold of you, Kevin, one more time.
Kevin at lifestylehousing.ca. Cell phone 807-355-2869.
Can you repeat the cell phone one more time?
807-355 Buns. It actually spells 2869.
So guys, here's a little incentive. If you actually stuck around right to the very end of this episode, you actually got to get Kevin's cell phone number. So we're gonna test if anyone stuck around right to the end. Okay, guys, have yourself a wonderful day. And until the next one, we'll talk to you soon. Bye for now. So what did you think? What a crazy, crazy tale. It had everything from drug dealers and car chases and, refinances and vendor takebacks and rent to owns and, relationship with banks. It was funny. I took like 5 pages of notes. I had to try to follow the bouncing ball along here because there was lots of, and maybe we'll call this the onion deal, right? It was a lot of layers deep on that as well. So bottom line is I first want to just make sure I thank Kevin. Kevin, you are a fantastic real estate investor. You're a fantastic coaching client. You are an instant implementator. Everything we talk about, everything we do, everything I give you, every challenge I put in front of you, you just, it's like I ask you, you got it? And Kevin looks at me, he goes, got it. And I know he's got it because he's an instant implementator. So guys, this was a deep look into a creative real estate deal. And it's amazing what can happen if you're in the market looking for deals, looking for good deals, creating good deals. The more strategies you learn, the more mentors, the more coaching you get, the more help and insight and resources you get, more deals come your way. And truly, this is just the tip of the iceberg for Kevin. I see some great things in the future for him. He's going to be starting to build out his entire investor pipeline. And there's going to be lots of people that are going to be wanting to invest with Kevin along the way. And the final thing I'm going to share with you guys is I hope you got a chance to make sure you heard Kevin's declaration about on his birthday. I believe it was his 40th birthday. And I wrote it down on my calendar. It's actually an appointment in my Outlook, as I'm going to be checking in with Kevin on that day just to make sure he hit that lofty target of $1 million in gross rental income by his 40th birthday. So anyways, guys, another wonderful episode. I just love bringing these things out. You guys get the sense that I really love sharing and I really love inspiring people to greatness. And I really love helping others on their journeys. And if you're interested in wanting some inspiration and help in your journey, I can help you. I truly have. I have multiple years of experience. I got an entire database of people who I can connect you with. I've got the tools and resources to help you elevate your game. So you don't need to be feeling stuck. You don't need to feel that you're going this alone. If you need help, there is help. There are resources available. And I'd love to be that guide to help you take your business to the next level. Okay, guys, until the next one, make sure you inspire people, encourage people, and always come from a place of love. Have yourself a wonderful day, everybody. Bye for now. Peace.